Welcome back everyone, my name is Ari and in today's video we are going to talk about interest rate. You probably have noticed it is one of the kind of talk of the country now. Everywhere you go, news, media, even in the barbecue, everyone is talking about interest rate because it has been going up for the last 6 months and it is going up like crazy. There's no tomorrow. So I thought today I'm gonna cover little bit of rate. I'll explain what is interest rate and how that actually work. Little bit I'm gonna touch on a little bit of inflation, why RBA is actually doing it, and then finally I'll show you some numbers that will help you to understand the impact of your the interest rate rise on your actual mortgage repayment. Let's get into this. So first of all, before I go in details, as I said, I'll just talk about a little bit of interest rate. So what is interest rate? So it is basically, so you need to understand there's two things. One is called cash rate, which is the actual rate that is determined by the Reserve Bank of Australia, and then there's a rate that lender passed to you. So at the moment, as of today, the cash rate is at 2.6%, which is set by the Reserve Bank of Australia, and then you looking at the variable rate from different lender is around 4.5 to 5% depending on the lender, and there's few other variables that determine your rate. So what is cash rate? Cash rate is actually fixed by Reserve Bank, as I said. So the cash rate has been very low at 0.10, almost like for a few years, and then since May this year, the RBA has actually started to increase the rate, and they have done it for the last 6 months. Now, why they do it? So there's few things that RBA actually does. Number one, they want to make sure that the Australian currency, or you can say Australian dollar, is stable, and then they want to also ensure that in Australia the employment is, it's not full, but there's like a stability in employment and then stability in the economy. So these are the three main things that the Reserve Bank of Australia monitor, and based on that they change the cash rate. But I think the reason that they have been doing it lately in last 6 months is basically to actually combat inflation. Now the second thing is inflation, as I mentioned before. So what is inflation? Like in a simple term, like in economics, it says when the price of items or the goods and services goes up, this is what the inflation is. For example, like if you go you probably have noticed, if you go in a petrol station, you want to fill up a tank, the petrol price has gone up. For a grocery store, you probably paid for milk $1 a liter or 50 cents a liter. The same milk has gone up to $2. Everything that you touch in last 12 to 18 months, you would have noticed that the price has gone up, from milk to car, petrol, every item in groceries as well, including the house price gone up, including the cost of construction as well. So this is all about inflation. So as I said, in a layman term, when the price or cost of the goods and services goes up, it is called inflation. And at this stage, inflation is really high in Australia. So I think I was reading through some papers on budget, and it says that inflation is actually expected to peak at a 7.74, I think, end of this final quarter. End of this, the last quarter, which is like the end of this year. So, but one thing you need to understand, that RBA, or the Reserve Bank of Australia, don't like this inflation, because what it does is like that high inflation reduce the purchase power of the dollar. Like as I said, if you could buy a milk with the $1 liter now, the same liter of milk will cost you $2. So the value of dollar actually goes down when the inflation goes high, and they always want to make sure that inflation is under control. So as RBA, they want to see an inflation rate between 2 to 3%, but at the moment it is kind of hovering around 7.5%. So there's a big gap there. So you need to understand, this is why RBA is actually have been just pumping up this interest rate to a level to see if they can control the inflation. And then how they do it, because what happened if they increase the cash rate and most of the lender pass that rate to the borrower, so what they do, the cost of borrowing money become expensive, and then those who has mortgage, like especially the variable mortgage, their the repayment goes up. So people, what they do, because to offset that, that high repayment, they probably cut a lot of other additional the other spending. When I say like others, they probably think, oh look, my repayment has gone up, so I'll probably cut on spending, like going for a holiday, buy less items. Maybe they will think of going for a dinner once a week rather than twice a week. So there is an impact. So this is why RBA basically trying to reduce the demand so that inflation comes down, and like it probably, I think they are trying to get to the level where it is not inflation is not a risk anymore to Australian economy, and this is why they have been increasing the rate, especially for the last 6 months. Now that you understand what is cash rate and inflation, I want to show you how is actually, if you have a home loan, how this is gonna impact in terms of dollar value. So I got a chart here that I want to share with you. Let's say you bought a house, let's say back in 2019 or 2020, and you got a variable home loan of $500,000 there. Now, back in, like, even not in last year, even early this year, the rate was really low. Like the sub bank was offering between 1.79, 1.99, 2.19. So the variable rate was really low. Even the fixed was low at 1.99. So the number that I'm showing here, let's say early this year in January, you had a home loan balance of $500,000. And you had a rate, let's say you had a rate of 2.5%, and it is a 30 years long term with an LVR at 80%. So your repayment was $1,976 back in January with that rate. Now, so RBA has started increasing the rate back in, I think the first one was back in May 2022. And then the latest one they have increased in October 2022. So in 6 months, what happened? The rate probably has gone up 6 times. Actually, it has gone up to 6 times, and it is even though the cash rate is 2.6, but after the bank has passed all the increase to the borrower, let's say your rate is now same rate is gone up from 2.5 to 4.5, and now your repayment would be $2,534, which is almost $560 increase in just 6 months span. So that's a massive hit to someone who actually got a variable home loan. Now, the other reason that I wanted to do that video is because there will be another meeting held tomorrow with the RBA governor so they do meet every Tuesday, and first month of every Tuesday. So the expectation is the rate is gonna go up again. Now some banks is saying there will be a 25 basis point increase, and some banks are predicting it might be 50 basis point increase, given the inflation figure that we recently got is actually higher than expected. So what will happen? So let's say you have a 25 basis point increase tomorrow. So that rate will go up from 4.5 to 4.75, which would make your repayment to around $2,700. So from here to here, there's $75 increase. And then let's say that goes up to 5%. So you have a repayment around 2,685, and there will be $150 more. Now, with that increase, like from May 2020 to, let's say there will be another increase in tomorrow, so you're looking at your repayment would have gone up from 1,976, let's say $2,000, to $2,685. It's almost, $700, a bit more than that. So it will probably, so for some people it will be 750, 800, depending on which bank you are and how much interest rate you are at the moment with the lender. But what I'm trying to say, for a $500,000 loan, after all this increase, you're looking at a monthly repayment of $700 to $750 more than your existing repayment if you compare this since early this year. And this is all about just 500K loan. A lot of people out there has got a mortgage of $1 million. If someone has got a mortgage of $1 million loan, their repayment will probably go up, like it just multiply by 2, so like $1,500. So this is a big jump. And for you, like I know a lot of people fix their interest rate back in 2019 or even in 2020, and this fixed rate was like it's a killer deal. It was 1.99. some people had done that 1.79, but a lot of fixed rate are actually expiring in next 12 to 24 months. So all I'm trying to say, if you have fixed your rate at that lower rate, and then once you come out of the fix, you will have an unexpected increase on your mortgage rate. So all I'm trying to say, if you have mortgage, whether you're in variable or whether you're in fixed, you probably need to prepare to take that extra hit, and you just need to work out how you're gonna do it. So I think this is all. I feel like there will be an increase tomorrow. Let's see. I'm sure there will be at least 25 basis point, and maybe there will be few more if the inflation keep hovering at around 7%. I think RBA will go hard and will increase the rate further. So look, I just thought that I will share with you this, and so that you understand the impact of that rate rise. I'm gonna actually do a bit more videos on this in the coming days, but if you have any question, you can always give me a call or send me an email. And I think just the last few points that I want to mention, even though we all know that the rate is going up, the repayment will also go up, but there's few other things that you can also do to minimize the interest that you pay. There are some other videos in my channel where I talk about making some extra payment. $100, $50 a month will help you. Having an offset account, or just changing that monthly repayment to fortnightly or weekly is gonna help you in the long run. So we gotta be very kind of a good manager to manage our home loan these days. As even the RBA said, we are in an unprecedented territory. We don't know what is coming, and I think it's $1 million question. We actually don't know what's gonna happen in the next 6-12 months time with the rate. So look, as always, and this final thing, sorry, and the refinancing is another option to see if you get some cheaper rate from other lender. So if you have any question with mortgage, or if you want to review your home loan or anything, and if you want to buy something, anything with home loans or investment and stuff, you can always give me a call. My number is there on the description below, and my email is there as well. Or you can put some comments. And thank you for watching my videos. I really appreciate that you guys watch my videos, and I will see you in my next one. Thank you very much. Good night.